Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar, the attempt to extend its Friday rally on Monday found a little bit of difficulty with the resistance at 69.45 showing some supply and therefore got a modest rejection. However, the market is now back to focusing on that level again. And if we get a close above 69.45, seen as a key resistance, then the next objective will be around 71 cents. So therefore, keep an eye on this level as the dollar index, which measures the greenback strength against a basket of 6 major currencies, still remains around the 102.90 to 103. Looking at the Australian economic front, Wednesday's annual CPI November forecasts an escalation of 7.2% versus the previous release of 6.9%. If so, the market may find a little bit of volatility if this is a stronger number. Also, the market will be looking at the Australian retail sales data, which may attract some attention as the forecast is higher at 0.6% against a former release of negative 0.2%. Besides the Australian data, markets will be watching closely to the US Consumer Price Index, which is also a key point. And along with that, we've got the Fed Chairman Powell speaking when he attends the Central Bank Conference in Stockholm this Tuesday. Looking at the euro, we can find that the market has broken through the 107.20 level and now looks towards potentially to 109 as an objective. Therefore, the market will probably keep an eye also on the dollar index as it holds around that 102.90, as the market may see that slip down towards 101.5, which would generate a rally for the euro, as mentioned, to around 109, or even stretching to 110. It is a bullish call, but the market will no doubt be a little bit ahead of itself in terms of the current forecasts that may emerge and rattle some of the views that I'm giving. The dollar yen has also maintained its bearish case as it looks still towards the bottom side of the range, seen around about 131.40 to down to the objective where the bullish hammer came through at 130.40.60. Technicals are negative, so therefore I feel that there is much pressure on the downside since the rejection of that top side around 134.5. Sterling also looking to a slightly positive case here since breaking above the 119.60 area, surging further and now confirms the outside or engulfing candle from the close above 121.60 and therefore looks towards an objective either to 122 to 124. Gold took the challenge to the top side but thought twice about it. It hit the level of 1,882. A key point, nevertheless, we haven't backed away so far and may again see a challenge there, so not to abandon this level yet, as if we see a break, could see a rise up to 1,900, and no doubt with the market pushing, with the dollar weaker, there is potential triggers to the upside of stop losses, so keep an eye on that. Wrapping up with oil, the market took a stab at the level of $76.20.30 and thought twice about it and rejected it. Nevertheless, the market is still somewhat negative, and therefore I feel that we are still looking down towards 73 or maybe down to $71 a barrel since that rejection. But don't abandon that top side as of yet, as we could still see another attempt, but the bears are likely to ambush this region. Well, that wraps it for today. Thank you very much for joining me, and as always, look at the intraday report and hope you enjoy the rest of the day.